Welcome to the deep dive. Today, we're really cutting straight to the chase with just a single but really effective idea for thinking about risk and reward.
Yeah, we're zeroing in on something called Mansi's Trading Tip 77.
Exactly. And the core of this tip, it's pretty potent, wouldn't you say?
Oh, absolutely. It boils down to this. Your success isn't just about, whether you're right or wrong.
Right.
What really truly matters is the size, the magnitude of your wins when you are right. And just as important, maybe even more so, is the size of your losses when you're wrong.
Precisely. It sounds almost simple, on the surface anyway. But when you really dig into it, this tip offers like a fundamental shift.
A real perspective change.
Yeah, on how you should look at any situation with potential gain and loss. So, okay, let's tackle the first part of Mansi's insight. How much money you make when you're right. What's the key takeaway there?
Well, it's really about maximizing those moments, when your analysis or maybe your intuition, it just clicks, it proves correct. If you've spotted something good, a promising opportunity, the goal shouldn't just be to be a little bit right.
Right, not just barely correct.
Exactly. It's about setting yourself up to really capitalize on being right, in a meaningful way.
Okay, let's unpack this a bit. So it's not just getting the direction, right, like buy or sell,
Yeah.
but the scale
Yeah.
of that potential positive outcome.
That's it. The magnitude.
So how might someone think about setting themselves up for those bigger wins? Without getting into specific advice, of course.
Right. Yeah. No specific recommendations here, but conceptually, it brings to mind things like maybe strategically scaling into positions that are working.
Okay, so adding to a winner.
Potentially, yeah.
Yeah.
Rather than just like a fixed amount every time, maybe you increase your exposure as things go your way. The main idea is that, a whole string of tiny wins might not actually add up to the same impact as just one or two really substantial wins. Just being correct isn't enough sometimes.
That makes perfect sense. Yeah, nailing a small win feels good, sure, but it's probably not going to drastically change your overall situation.
Not usually, no.
Okay, now let's flip that coin. Let's look at the other side, the second really vital part of the tip. How much you lose when you're wrong. This feels like it's all about defense, about protection.
Absolutely. Damage control. I mean, limiting your losses is, well, you could argue it's even more vital than chasing the big wins.
More important, really.
I think so, in a way. It's about protecting your capital, your resources. That's what lets you stay in the game, right? To even have future opportunities.
Okay, yeah, that makes sense.
Think about it. Even if you have a really high win rate, you're right most of the time. A few really big catastrophic losses can just wipe all that out.
Right, completely negate all the good work.
And even put you behind where you started. It happens.
So here's where it gets really interesting.
Yeah.
You can be right, say, 70, 80% of the time, but those few times you're wrong, if they're costly enough,
Poof. All gone.
it just erases all that progress. How does someone avoid that trap? Because it sounds easy to fall into.
It is easy. And that's where discipline comes in, specifically the discipline of risk management.
Ah, okay. Risk management.
Yeah. Using strategies to actually define and, more importantly, limit your potential downside. Things like, stop losses in trading or just having really clear get-out plans in other ventures. It's essential.
So you know your maximum pain point beforehand.
Ideally, yes. The goal is to make sure that when you are wrong, and you will be wrong, sometimes the hit is small, manageable, like a controlled experiment, sort of. You learn, but you don't blow up the lab.
Okay. So Mansi's tip isn't just about being a good fortune teller. It's really about the asymmetry, the imbalance between your good outcomes and your bad ones.
Precisely. Asymmetry is the key word. Could you maybe paint a picture of how that plays out, like a comparison?
Sure, yeah. Let's think about two different approaches. Strategy A, let's say. Maybe it only works out 40% of the time. Not a great win rate on the surface.
Right. It sounds kind of mediocre.
But when it does work, the gains are, say, 5 times bigger than the losses you take on the other 60% of the time when it doesn't work.
Okay. Big wins, smaller losses.
Now, contrast that with strategy B. This one looks great. It works 70% of the time. You're right way more often.
Feels good, right? Being right that often.
Totally. But the 30% of the time it fails, the losses are really substantial. Maybe they're like 3 times bigger than the typical win.
Ah, I see where this is going.
Yeah. It's actually quite possible, even likely, that strategy A, the one with the lower win rate, ends up being way more profitable over time because those big wins just dwarf the more frequent but smaller losses.
While strategy B, despite feeling good because you're right so often,
Right.
could actually end up making less money or even losing money because those big losses just keep eating away at all the smaller gains.
Wow, yeah. That comparison really does bring it home. It's not about the feeling, the ego boost of being right frequently. It's about the actual numbers, the bottom line. And this must tie into psychology, right? The emotional side of making decisions.
Oh, absolutely. Massive.
We always hear about how hard it is for people to cut their losses, to admit they were wrong.
It's true. There's a very natural human tendency, to want to be proven right. It feels good.
Yeah.
And taking a loss, closing out a position that went against you, it can feel like admitting failure, like a personal setback.
Mm.
But Mansi's tip, it encourages a shift away from that, moving away from that emotional need to be right this time and focusing instead on the practical financial outcome over the long run.
So detaching the ego from the individual trade or decision.
Exactly. It's about focusing on the overall strategy, making sure your average win is significantly larger than your average loss. That's the game.
Okay, so the core insight, boiling it all down, successful trading, and probably lots of other things involving risk.
Yeah.
It isn't just about accuracy,
Mm.
not just hitting the target.
Right.
It's fundamentally about creating that positive imbalance, that asymmetry, making sure your wins are just much, much bigger than your losses when they happen.
Precisely. It's the relationship, the ratio between the magnitude of your successes and the magnitude of your setbacks. That's what dictates the long-term result, not just the win rate.
So to kind of wrap this specific tip up, Mansi's trading tip 77 is basically saying, don't just aim to be right. Aim to win big when you're right and lose small when you're wrong.
Yeah, it's all about the scale, the size of those outcomes.
That's a concise way to put it. It sounds simple, but it feels like a really profound shift in thinking.
It is. It's subtle, but it can lead to dramatically different results if you actually internalize it and act on it.
It really makes you think, doesn't it? This whole principle of asymmetric outcomes, maximizing the good stuff, minimizing the bad stuff, it probably goes way beyond just trading charts.
Oh, for sure.
Where else might you, listening right now, see this idea playing out? In your own decisions, your own experiences?
Yeah, that's a great question to leave people with. What if you, consciously shifted your focus?
From just trying to be correct all the time.
Right, to strategically trying to make your successes really count, really amplify them, while being super diligent about cutting off the mistakes early, minimizing that damage.
What could that unlock? In your work, your projects, maybe even personal life stuff.
Exactly. What potential is there?
It's definitely a powerful idea to mull over. And look, we've only scratched the surface here today. We're definitely looking forward to future deep dives, exploring more insights like this one.
Lots more to explore.
Absolutely. Thanks for tuning in.